By 1910, Paul Warburg wasn't pitching a central bank anymore. He was wiring up a reserve system. So in a United Reserve Bank of the United States, he sketches a national backbone with a Washington head office, about 20 branches, and about $100 million in fully paid capital. Anyways, so dividends cap at roughly 4%, and all excess profits go to the U.S. government, a public service design, not a profit play. So the lessons from this article, again, the title is a United Reserve Bank of the United States. So centralized reserves and standardized liquidity is the lesson. So member bank balances at the United Reserve Bank would earn no interest but count as cash, turning scattered vault money into one mobilized reserve. Liquidity flows through a two-lane rediscount pipeline, one for very short paper, which is less than 28 days, rediscounted directly, and then two is longer-term paper, which is up to 90 days, rediscounted only with a local banking association's endorsement. At a published rate window, acceptance buying, selective foreign bill operations, and even bullion dealing, and you've got an elastic, rules-anchored safety net. Governance stays representative and non-political, branches get local boards, and profits beyond the small dividend revert to the public. So, we need to start with the structure. So Warburg's 1910 plan places the head office in Washington with about 20 branches, capitalized at $100 million, fully paid, and he also envisions dividing the country into 20 different zones, each with a local banking association that requires paper so it's eligible for rediscount. An ingenious way to keep risk screening close to the ground while pooling reserves nationally. On incentives and public purpose, stock could be apportioned to banks or even sold to the public. Dividends capped at about 4%, and profits above that flow to the government. So Warburg even floats the idea that the U.S. could guarantee the 4% or subsidize expenses because the bank's operations would ultimately save the treasury money and become a permanent source of revenue. Now for the engine room, the members' deposits. So the United Reserve Bank would accept deposits from the government and from member institutions only with no interest paid, but member balances may be counted as cash. That's the reserve centralization move, one reservoir, many pipes, that undergirds the rest. So the rediscount lanes are precise. The bank buys at published rates, less than or at 28-day commercial paper directly, and then between 28 and 90 days for paper is only with the local association guarantee. Again, that's the local banking association for each zone. So the caps and endorsements keep the assets short, self-liquidating, and well-screened while ensuring rate guidance through the published schedule. To deepen market plumbing, Warburg layers in bankers' acceptances and first-class foreign bills of less than 90 days on well-known foreign houses, so the central institution can buy, hold, and resell paper that anchors dollar money rates to global benchmarks. He also authorizes bullion dealings and bond operations and makes the bank a branch system with local oversight boards, again balancing national policy with local information. So zooming out, Warburg's contemporaries recognized that his two big innovations for America were one, shifting the focus from currency to reserves, and two, installing a true rediscount policy. So this is the operating manual for a pragmatic reserve union. Count central balances as cash, publish and police the discount curve, and use local associations to guarantee longer-term paper and send excess profits to the public purse. It's Warburg's way of making panic survivable by wiring the country's liquidity to one disciplined, transparent backbone, run for stability, not speculation. So, to note, this United Reserve Bank is basically Warburg's kind of, we'll say, brainchild. That's kind of like the actual name for it of what became the Federal Reserve. It was kind of just his example of if everything was perfect per the opinion of Paul Warburg, this is the example, right? And you'll see that in the documentation as well.